Remember 2008? Lehman Brothers went bust, the panic was global, the world was on the edge. It was terrifying, but we pulled through. Now imagine not just a bank collapsing, imagine the bedrock of the entire global financial system crumbling. Not some technical hiccup we usually hear about, but a real, brutal default. The United States announcing, we are not paying our debt. We're talking about the US Treasury bonds. Do you know what treasuries are? They aren't just paper. They are the foundation, the anchor that holds literally everything together. They are the main asset held by central banks worldwide. They are the guarantee for every major contract, the collateral for every serious bank loan. They are essentially the dollar. If that foundation collapses, if the US defaults, everything crashes. This isn't just a crisis. This is a financial secession, a break from the familiar world. This won't be a recession. This will be the Great Depression. 2.0. And the question isn't whether it will hurt. The question is, can we ever put the pieces back together? And most importantly, who gets hit the hardest? Let's dive in. Today, we're going to talk about what happens if the US says, that's it, accounts closed. Let's start with the root of the nightmare, the collapse of treasury bonds. Imagine you live in a house built on the most solid foundation in the world. Every expert, every neighbour, your entire life tells you, this is concrete, this is steel, this is forever. And suddenly, that foundation starts to crack. US Treasury bonds are that foundation. The national debt is now well over $34 trillion. It's a number so huge nobody can really picture it. But as long as everyone believes America is able and willing to pay, things are fine. This is called faith in the dollar. The moment that faith vanishes, the moment a real default is declared, the value of those bonds drops to zero. Because paper you won't get paid on is worthless. And this triggers the first, most massive effect, the freezing of global transactions. Right now, whether you're buying oil in Saudi Arabia, selling iPhones in Germany, or just transferring money from bank to bank, dollars are used. And these operations always rely on treasury bonds as collateral or as the asset that secures the deal. When banks who held these bonds as the safest asset on earth see their value wiped out, they instantly become insolvent. They simply can't meet their obligations. It's like walking into your bank and they say, sorry, our vault just turned into a pumpkin. The biggest casualty here is the global payment infrastructure. Think back to 2008, when Lehman Brothers fell. The credit markets froze. Banks stopped trusting each other even overnight. They wouldn't lend money because they feared their partner would go bankrupt tomorrow. Now multiply that fear by 100. After a US default, interbank payments will just stop. Nobody will wire money. Everyone will be waiting, trying to figure out who else is going down. You won't be able to buy a product. You won't be able to sell a product. Imagine that one day, every ATM, every online transfer, and every international contract is shut off. Money literally stops moving. This isn't just an inconvenience. This is the cessation of world trade. Let's look at a concrete example: Japan and China. These countries are the two biggest foreign holders of US government debt. China and Japan hold trillions of dollars in US treasuries. When the US announces, we are not paying you, those trillions turn into zero. For these countries, it's a national catastrophe. Overnight, their central banks and their largest commercial banks lose massive chunks of their capital. In response, they could start a panic sell-off of all their remaining dollar assets, trying to salvage anything they can. China, for instance, owns massive amounts of US corporate stocks, real estate, and more. A massive liquidation of all those assets to cover the giant holes would cause a stock market crash in the US, unlike anything we've ever seen. The Dow Jones and SP 500 would lose not just a few percent, but tens of percent in days. This triggers a chain reaction worldwide because global investors hold US stocks. Foreign companies that transact in dollars suddenly can't get paid, can't get credit, because the bank they use is barely breathing. This is financial Armageddon. Here's the first big takeaway. A US default won't just ruin America's financial system. It will freeze global trade due to the instant loss of confidence in the only global settlement instrument, the dollar and its foundation, the treasuries. This will cause mass bank failures and a payment shutdown, leading to an immediate economic shock that makes 2008 look like a mild flu. The world stops exchanging goods. But that's just the beginning. We've talked about banks and countries, but what happens when this shockwave hits everyday people? Treasuries aren't just the basis of banks. They are the basis of pensions, insurance policies, and the personal savings of hundreds of millions globally. If the system collapses, where do people run, and what will they use to pay for things? This is where it gets really scary. So global trade is stalled. Banks don't trust each other. Here comes the second, more terrifying wave: total panic. In this situation, people always rush to get their cash out. The payment freeze will instantly lead to bank runs all over the world, not just in the US, but in Europe, in Asia. Why? Because every major bank, from Tokyo to Frankfurt, holds US assets. Customers know this, or worse, they feel it. They hear the news. The world can't exchange money, and they rush the ATMs. The banks, of course, can't pay everyone in cash. There will be a liquidity collapse. Capital controls will start being implemented. That means you simply won't be able to withdraw more than $100 a day, or you won't be able to wire money overseas. Your paycheck might be deposited, but it becomes virtual and inaccessible. At this point, the money in the bank stops being money. It becomes entries on a computer you can't cash out or spend. Do you see the nightmare? You're solvent, but you're broke. But the worst part is what happens to the dollar as the reserve currency. Having lost faith in US bonds, the world loses faith in the currency they are based on. Imagine you trade oil. Yesterday you were sure that for a barrel you'd get $100 and you could save that money. Today you know those dollars could turn to dust. Nobody wants to hold dollars. Everyone tries to dump them, buying anything that isn't a dollar. Gold, silver, land, canned food, even just bottled water. This triggers hyperinflation. Not the inflation we see every year, but inflation that makes prices double in a single week, because the amount of dollars in circulation is still huge, but their purchasing power has been destroyed. In the US, prices for gas, groceries, and medicine will skyrocket. It will become impossible to live on a regular salary. Economic life in the country and many of its trading partners will halt. Mass unemployment will follow because businesses that can't get credit or payments simply shut down. The Great Depression on steroids. This isn't hyperbole. Let's look at a concrete example: pension funds. In America and elsewhere, pension funds are massive machines managing the retirement money of millions of people. They are legally obligated to invest in the safest asset, and that is US Treasury bonds. It's the law. When those bonds are wiped out, the pension funds instantly go bankrupt. This means a person who worked honestly their entire life, saving for retirement, wakes up one day and finds out their savings are gone. Insurance companies, which also hold treasuries as collateral, cannot pay claims for medical bills, car accidents, or disaster relief. People who were financially secure yesterday are destitute today. We're talking about millions of lives ruined. Consequently, the streets will be filled not just with the unemployed, but with desperate retirees and people who lost everything. Social tension will peak. Remember what happens in countries where people lose faith in the future: mass unrest and political chaos. This isn't just a financial problem, it's a humanitarian disaster. Here is the essential point to remember. A real US default will destroy more than just financial accounts. It will shatter people's trust in any paper asset and government guarantee. The world will face hyperinflation, bank shutdowns, and the mass wipeout of pensions and insurance. The economic crisis will escalate into a social collapse. The question stops being about economics and becomes one of survival. When the old order collapses, there is always a chance for the new. If the dollar is dead and can no longer be trusted, what replaces it? Where does the colossal capital fleeing US assets go? Who wins from this chaos? Let's keep going. The most interesting part is next. So, the dollar has lost its status, and the time for financial secession has arrived. The world, desperately needing a medium of exchange, will start looking for a replacement. This will be a race. Who can offer an alternative the fastest? Candidate 1. The yuan and the BRICS nations. China, having lost trillions, will try to use this moment to push the yuan as the new reserve currency. The BRICS countries, Brazil, Russia, India, China, South Africa, may try to create their own payment system completely independent of the dollar and US banks. They will demand all trade between them be conducted in national currencies or their new settlement instrument. The problem: nobody trusts the yuan the way they trusted the dollar, because Chinese capital is closed and decisions are made politically, not by the market. There's no free movement of capital in China. The world won't want to trade one dictator for another. So the yuan might become a regional currency, but not a global anchor. Candidate 2. Gold. Gold has always been the final safe haven. In the event of a collapse of all paper money, people and states will rush to buy physical gold and silver. The price of gold will shoot up to historical highs. But gold has a huge problem. It's impractical for transactions. You can't pay for a cup of coffee with a gold nugget. It's hard to store, transport, and divide. It will become a store of value, but not a currency. It will allow the wealthy to preserve their wealth, but it won't help restart trade. Candidate 3. Cryptocurrency and decentralization. And here's where something that seemed like a geek toy a few years ago enters the stage. Decentralized cryptocurrencies like Bitcoin or other stable, but non-government coins. Why? Because after the collapse of the US government, people will seek something no government can touch, a system that works without trust. Cryptocurrency is not tied to any central bank or any debt. It operates on mathematical rules. In a situation where banks aren't working and the dollar is worthless, Bitcoin could become a global medium of exchange. But here's the huge drawback. Cryptocurrency is currently too volatile and too slow to handle all global trade. Yes, it might become the currency of the survivors, but not the engine of the world economy. Nevertheless, this will be the first real chance for decentralized finance to seriously challenge the traditional banking system. This is the biggest inflection point. The hardest hit in this block will be Western Europe. The European economy is tightly bound to the US and the dollar. European pension funds, insurance companies, and commercial banks all hold massive amounts of treasuries. A US default will hit them directly as the second largest holders of these bonds. Europe will be fractured, its economy weakened, and it may become a financial casualty to be devoured by new centers of power BRICS, and potentially the decentralized world. Look at shipping. This is the circulatory system of global trade. Contracts for shipping, freight, and vessel insurance. All of it is denominated in dollars. After a US default, not one shipping contract will be worth the paper it's written on. To send an oil tanker from the Persian Gulf to Europe, you need a new means of settlement. Imagine ship owners refusing to accept dollars. They will demand physical gold or cryptocurrency or commodity barter, oil for wheat. Logistics will collapse. Ports will shut down. In a world used to just-in-time delivery, there will suddenly be a shortage of everything. Imported goods will vanish from stores in Europe and America. Coffee, bananas, electronics, medicine. This will be a shock of isolation, caused not by politics, but by the absence of functional money. The only things that will work are local, internal, self-sufficient economies that don't depend on global imports. What's the bottom line? A US default will lead to financial secession, a break from the dollar system. The world will be caught between new regional currencies, the yuan, archaic gold, and revolutionary cryptocurrency. None of these candidates can immediately become a complete replacement. A period of chaos will ensue where those countries and people who can quickly decentralize their transactions and become less dependent on global imports will survive. But this, folks, is not the end of the world. It's a reset. What to do if this nightmare becomes real? We've walked through a scenario that, just 20 years ago, felt like pure science fiction. The collapse of treasuries, the halt of global payments, hyperinflation, the destruction of pensions, social chaos. Who gets hurt the most? Remember these three groups: retirees and insurance holders worldwide whose savings were mandated to be held in the safest asset. They will lose everything. Western Europe and Asia, Japan, China, as the largest holders of US debt and the most integrated into the dollar system. Americans themselves, who will live at the epicenter of hyperinflation and social collapse, unable to get credit or receive their own paychecks. Will anything be trustworthy after this? No. Trust is the main asset that will be annihilated. Trust in government, in banks, in any government-backed paper. Recovery will take not years, but decades. The world will live by the motto, trust but verify 100 times. But this terrible scenario holds one key lesson. The only systems that can survive such a financial secession are those that do not require trust. That is gold, which exists and you can touch, and decentralized cryptocurrencies, which operate on code, not on a government's promise. This isn't fear-mongering. This is the most realistic analysis of the worst-case scenario in human history, and only those who don't just ignore it but understand its mechanics will be able to preserve their wealth, and perhaps even grow it amidst the coming chaos. If you want to be ready for a future that could be very turbulent, you need to start diversifying your assets outside of traditional instruments. Study the mechanics of gold and decentralized finance. Learn how Bitcoin works, not as a speculative asset, but as a reserve system. Now for the most important question to get you thinking, which country, outside of the BRICS nations, but with a strong economy, do you think would be able to transition the fastest to its own currency for international settlements and get by without the dollar? Drop your answer in the comments below. Let's discuss it. Like, subscribe, and hit that bell so you don't miss our next deep dive on how to profit from hyperinflation. Thanks for watching.